feel free to download the free trading strategy. It's a different trading strategy than the one I'm going to be talking about right now. But let's start, and let's discuss how I find repeatable trading patterns in the euro dollar and the pound dollar every day. As always, past performance not only good future results. Trading forex algorithms may be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding trading such leverage products, you should carefully consider investment objectives, level of experience, and risk. Possibility exists you could stand loss on your initial investment, and therefore you should not invest money you can afford to lose. Should be aware of all the risks associated with trading and margins. Seek advice from an independent financial advisor if you have any doubts. Information, including commentary traded is provided on bkforex.com, should not be relied upon as substitutes of research. Should be informed for making investment decisions. BKForex LLC and Com merely providing this information for your general information. Information and opinions presented do not take into account particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making investment decisions and should tailor the trade size and leverage according to their own personal risk appetite. BKForex LLC is not responsible for any loss incurred in investments made by readers and clients as a result of any information contained in BKForex LLC. BKForex LLC does not render investment, legal, tax, or other professional advice. Investment, legal, tax, or other professional advice is required. Services of a competent professional should be sought. Okay, awesome. I want to load my charts up. Bear with me. And I want to run you through. Let me just make sure we all see my charts. All right, tell me you're seeing my chart. Just make sure that everybody's seeing it because it's very, very important. Yes? Okay, great. All right, excellent. So I want to share with you what we BK Club service every single day. And this particular setup really came out of a need and a desire to find something that can be staged, can be used in other pairs. Yeah, I'm going to go through all the pairs that it can be used on. I'm going to show you in the euro first, and then I'll show you the other pairs. It's used in euro and the pound primarily. I wanted to create a setup that can be staged. In other words, you could pre-plan the setup that could be repeatable every day, and they could have a relatively high probability success rate in its back test. And of course, past performance is not indicative of future results, but the back test for this, for example, tested around 79% accuracy. On the other hand, when you're going for very high probability setups, you have to have a very negative risk-reward ratio. So I'm going to show you the rules for the setup, and it certainly may not be for everyone, because once you see the risk-reward ratios, you may not like it. But I'll explain to you what we do and how it works. Basically, here's the setup. What we do is we look at the and this is all New York time, right? So translate to your own time, but this is 4 o'clock a.m. New York time, which is 8 o'clock GMT, 9 o'clock in the morning London. Basically, the opening of the European trading session, and we're looking at the euro dollar to start with. And what we're doing in the euro dollar is the following. Originally, our setup was like this. I'll show you the original setup, and then I'll tell you what we do now. So we go to the 4-hour chart, right? So let me go back again. So this is the 4 o'clock hour, right? And this is the 4 a.m. bar. That is the 4 o'clock bar that closes at 4 a.m. New York time, 8 o'clock in the morning European time. I'm going to move this off so you guys can see it a little bit better. And the original setup was like this. It was, let's take a look at the high, which in this case is 130.84, and the low, which in this case is 130.45, right? And the idea was, let's put a buy stop, a breakout order on the high, a breakdown order on the low. Whichever one hit first, the other one goes away. The other one disappears, right? So, as a matter of fact, today, both of them would have hit. But the point is, whichever one hits first, you get rid of the other one. And you trade this with, so in this particular case, you would be, selling the euro at 130.45, and you sell it with a 25 pip stop. So, that would be a 30.60 stop. No, excuse me, 30.70 stop, right? 25 pip stop against that, right? Am I right? Yeah, 30.70 stop. With a very, very tight target, only an 8-point target, which in this case 45 plus 8 is 33, right? And as you can see, it just barely makes the the trade, and it basically worked out. So it's basically a volatility breakout. It says, look, come European session, there's going to be movement. We don't know which way the movement is going to happen, but once the movement happens, we're going to make a bet that the movement is going to have some continuity. And we're going to give ourselves plenty of room to make sure that we don't get stopped out unnecessarily, but we're going to just take a very small slice of that movement. And Mike has asked me if it's a scalp type of a setup. It could be classified as a scalp in the sense that it's a very short-term setup. We call it the 825 setup in the club. But it's not scalping per se. Scalping in a classic sense is to buy on the bid, sell on the offer. That's not something we do because you cannot do this as a retail trader. It's just to you're competing on too fine a level. This is more or less, I would say, these type of setups take anywhere between half an hour to 4 hours to develop and transact. So it's an intermediate term day trading setup. But what we try and do is it's repeatable every day, and hopefully it's controllable, right? Because we have a relatively small stop on it at minus 25. So that was the original setup. The original setup was basically the high lows of the 4 o'clock bar, and then I decided to modify it to make it more of a level setup. So the current setup that we're trading right now is basically. Let me just get rid of this. Let's go on the half-hour chart, so you guys can see this a little bit better. So there's a 5 hour. So here's the 4 o'clock. Okay. So as you can see, this is the 4 o'clock bar, right? As you can see, the close here is 30.48, and the setup basically says, take the reading at the close. Do I have candlesticks adjusted for New York time? Yeah, this is all New York time. Your candlesticks look kind of different. This is New York time, so maybe your candlesticks are different. This would be 8 o'clock GMT. For all of you who want to centralize, this would be for 8 o'clock GMT. Okay. So, anyways, what we did is it turned into a level setup. So we take a value at 4 o'clock. 4 o'clock, the value is 30.48, right? And we basically say which the 50 cent or the 00 cent value that is closest to this particular value, we would put a straddle. So if it's 30.48, that means we're going to be selling the euro at 30.100 because it's the next 00 level down, and the next 50 level up is 30.50. So we're buying the euro at 30.50. And as you can see today, it really didn't matter if you sold or bought the euro at 30.50 because either way, if you sold it to the downside, you would have hit your profit target. Of course, past performance not a negative future result. And if you bought the 50, you would have actually survived the stop. The low today was 27, so you would have survived the stop. You would have been able to participate in the rally, and it would have worked for you to the upside as well. Now, generally, it doesn't come that tight within the 50. Usually at the 4 o'clock level, it's in the 30s, it's in the 20s. You generally have much more time to kind of lay out your order. And just to give you an idea of how this works normally on a general level, we do the exact same setup with a pound dollar, except the timing is different. And the timing in the pound dollar is the 8 o'clock New York, which is the open of the New York session, which is 12 GMT, noon GMT. So here's the 8 o'clock candle in the pound dollar, right? And if you look at the pound dollar, the close on the pound dollar, the close on the pound dollar, this is not exactly a great example, but it still gives you an example. So it's 503, 5303, right? So in the pound dollar, what I did in this level setup is you put a buy at 53.50 and a sell at 5300, right? So what happens is it actually, and this setup just literally triggered and hit target. So let me just see. So this is 5303. The low here is 5303. Basically, it broke through. Where was this? Broke through at the 10 o'clock hour. That's exactly it, right? That's exactly it. At 10 o'clock hour, my short got triggered. It did not get done. It then rallied back up, and it went against me. But because my stop was all the way at 53.25, I had plenty of room to ride out the stop, right? And then the setup turned again to the downside, and this time it did hit the target. Past performance not indicative of future result, and this was another plus 8 trade. So today there was a plus 8 trade in euro, plus 8 trade in the pound. Past performance not indicative of future results, but that is how we do this every single day. It's very slow. It's very methodical. And it is not a lot of pippage. But, and this is a critical thing, this kind of a setup is basically designed so you understand the mathematics of the setup, right? Here's a calculator. If you, let's say you do 100 trades. If you do 76 trades times 8 pips, you have 608 pips. And then you do 24 trades, as these are your losses, times 25, that's 600. So effectively, you need to be accurate 76% of the time in order for the setup to break even, right? And in order for the setup to be profitable, you need to be profitable anything above 76. Now, in the back test, and of course past performance is not indicative of future results, in the back test, setup has tested pretty much at around 79% accuracy. So if you were to do the back test, a hypothetical idea, you would take 79 times 8, which is 632, and 21 times 25, which is 525. So 632 minus 525 is about 100 points. Let's just make it 100 points. Remember, we have slippage, we have execution. It is very unlikely that in real life the results would be this accurate. But let's just say it's an estimate of about 100 pips per 100 trades. That's not a lot of pips, right? That's not a lot of pips. But remember, you're trading twice a day in 2 different pairs, and if you assume 250 trades a year, if you just assume those, that's 500 trades a year. And if you can achieve these targets of 100 pips per trade, that's 500 pips per year. That's for me. That would be an excellent result. If I could have matched the hypothetical results, that would be quite good in terms of how I would be trading. So I don't have a lot of time today, so I just want to leave this out, for questions for anybody who wants to understand the setup very well. It's basically a volatility breakout setup. What we do is every morning we propose the following, that if the euro breaks out one level or the other level during the European session, the prospect of continuity is going to be pretty strong. And if the pound breaks out one level or the other level during the New York session, the prospect of continuity will be relatively strong. Does everybody understand what we do here? Does anybody have any questions? I'll wait for some questions, while I bring down the mathematics of this. And let me just see. I just want to, while I bring down the mathematics, I just want to show you. So this is only one of a whole bunch of very interesting setups that we do every single day in our BK trading service. And it's very easy to join our service. For those of you who are not members, you can join them. If you're an FXCM member, you can get an $85 per month discount, which is like more than half. Or if you want to just try it for a week, you can try us for $59. And once you join, every single day, you're going to get access to either Kathy or I, where we discuss all these various setups. So today, for example, was technical analysis. Tuesday, tomorrow, Kathy does markets. On Thursday, I go through a lot of these strategies, and we do some different variations. And then on Friday, we discuss all sorts of various issues about the trades and also do a lot more strategies. And the point is that we can do this in a private setting with lots of different ideas where people come up with different variations on the theme. This is just one of a lot of very, very different setups that we do only privately in our sessions. They require a lot of nuance. There's a lot of stuff that I haven't quite told you, that we do. But overall, what we try to find is highly repeatable, highly controllable trades. The other reason why I very much like this kind of a trade, by the way, the final reason, is that I can lay out my orders. I put out my orders, and I simply don't have to monitor the market that carefully, right? I mean, once one order is triggered, I definitely do want to automatically cancel the other order, right? But generally, because the order is 50 points away, I don't have to rush to the screen to cancel it right away. More importantly, because I can preset my orders, my orders get automatically taken into the market, and then hopefully if it hits profit, it gets taken into take profit. If it hits a stop, it gets taken out. Of course, you have slippage. Of course, past performance is not indicative of future results, and of course, you have all the market risks. But as a strategy, it's a much calmer type of a methodical strategy than something that requires market entry, market execution, instantaneous kind of structure, which is much harder to do. It is not okay to use the Asian session high and low. The setups are designed strictly for the European Open and strictly for the London Open. This is the one thing I will tell you. Do not screw around with different times. The key to this setup is the time. We trade. It's effectively a time setup. It's a time setup, not a price setup, and not a. It's a time setup for a particular currency pair. So you cannot apply Asian session highs and lows. You cannot apply, European highs and lows. You apply European you apply European levels to the euro dollar, U.S. levels to the pound dollar. That's how you trade it. In the setup, I put both buy and sell orders on both sides, and then when one order is triggered, so for example, let me take you through the pound trade. In the pound trade, which you can see over here, I put in an order to buy at 53.50 and in order to sell at 5300, right? I did this at the 8 o'clock hour. Where's my 8 o'clock hour? Here's the 8 o'clock hour. I did this at the 8 o'clock hour. Then at the 10 o'clock hour, my 5300 sell order triggered. I canceled this order, and then I let this order float until it either got stopped out or it made target. In this particular case, it made target. Past performance not indicative of future results. As you can see, the target was 92, and it traded all the way down to 87, so it gave me plenty of time to make target on my strategies. Okay? All right, guys. This is Jordan's Suite webinar, but it's hopefully going to be a very good one because it's a direct strategy for what we do. I ask you again to join us if you like at the BK Club. Just simply hit one of these buttons, and you will have free access to all of the stuff that we do here, including all the strategies and everything else that we have. And I welcome and I thank you for coming in and being with me. Sorry I have to run so early today, but this is probably one of the better setups that I can offer you, and I hope you guys enjoy it. The next time I see you, we'll discuss this setup in more detail, and hopefully you'll have some experience, and if you guys come join us at BK, I'll be happy to talk to you there about all the things that's going on. All right, thanks again, and I will talk to you soon. Take care.